Why Bitcoin won't die, despite everything. Bitcoin didn't flinch. While the world was watching tensions rise between Israel and Iran and markets started getting shaky, Bitcoin just held steady. And that small moment, it might be signaling something big. Bitcoin isn't acting like a risky asset anymore. It is acting like a safe haven, a digital fortress, if you will. We are seeing a shift. Gold and bonds used to be the go-to when things got uncertain, but now Bitcoin is starting to take that role. And it's not just crypto people saying that anymore. The bigger players are paying attention too. Hey, I'm Neil, and in this video we are diving into what is really going on with Bitcoin right now. Why it's holding up so well, what that tells us about the bigger picture, and why the idea of Bitcoin hitting 250k might not be crazy at all, but actually part of a much bigger long-term trend. So stick around, this isn't about hype, it's about smart strategy, big picture economics, and the rise of something that could become a new global standard. First, let's go to the battlefield. I have to stop using that one. Anyway, time for a quick heat map and CVD. Check to see what the price action is telling us. Bitcoin kicked off the session at 105.5k. At first, we saw a small push upward, but that didn't last long. The price slipped and got stuck in a narrow range, caught between short liquidations stacked from 106k to 107.1k and longs loaded below that 104.8k to 103.1k. The price line slowly drifted down, rubbing right up against that 104.8k level, the edge of the long liquidation zone, before bouncing back a bit and moving sideways. To me, it looks like the market is lost. Buyers and sellers are hesitant. No one's confident enough to take control. Then, Bitcoin dipped, briefly, to 104.4k, triggering some of those long liquidations. And that's when things got interesting. The price bounced from support and made its way back up, climbing into that resistance range around 105.5k to 105.7k. You can spot it as a light yellow zone on the chart. It took some short liquidations at that level, got rejected, but then recovered quickly and climbed again. At the time of this recording, Bitcoin is sitting at around 105.6k. Now, let's zoom in on the liquidation zones. Above the current price, there is a thick wall of short liquidations, a clear resistance zone stretching from 106k to 108k. And right in the middle, a strong resistance line glowing yellow at 106.7k. To break through this zone, Bitcoin needs serious momentum, heavy volume, heavy conviction. On the downside, there's just as much action. We've got a layered support zone starting from 104.7k all the way down to 102.8k. A lot of yellow lines show strong interest around 104k and 103.4k, and that's where buyers are waiting. Bottom line, the battlefield is heating up. Both bulls and bears are gearing up for a move. But right now, it's a game of patience and pressure. The Israel-Iran conflict stirred a typical risk-off wave. Crypto sold off, oil and gold rose, Bitcoin dropped, but strong institutional demand is keeping it grounded in the 104k, 106k range. Stay sharp, the next breakout could be just one liquidation away. Time to dive into the CVD data and see what the whales are doing. First off, take a look at the fire chart. There is a clear sell wall forming just above 110k, and we're seeing a pattern. Every time Bitcoin pushes higher, there is repeated sell pressure right near the top. It forms, it fades, and then it comes right back again. That is coordinated resistance. Now, let's take a look at the movements of the whales activity. Looking at the CVD, the biggest players, the brown line representing 1 million to 10 million USD orders, they are still showing strong buying. The mega whales are not hesitating. But the rest, not so bullish. The purple line, orders between 100k and 1 million, is showing steady selling. As do the rest of the smaller players, the green, orange and red lines, they are also offloading. That's retail and smaller whales stepping back. We can clearly see it. Selling pressure is outweighing buying pressure. Yes, there's buying happening, but it's mostly coming from the mega whales. In simple terms, top tier whales, those placing million-dollar orders, are quietly accumulating. But everyone else, mid-sized whales and retail traders, are selling or sitting on the sidelines. So, while Bitcoin's price might look stable on the surface, underneath there's a real power imbalance. The big players are loading up. The rest of the market is letting go. Here's the thing. While everyone's eyes were on rising tensions and markets shaking, Bitcoin barely flinched. That quiet strength tells us it's not just another risky bet anymore. It's becoming something much bigger. Just 72 hours ago, Israel launched a major air and missile strike against Iran, hitting key nuclear and military targets. I told you that in my previous video. The update is that Iran fired back with hundreds of missiles deep into Israeli territory. Things escalated fast, and suddenly everyone was worried this could turn into a full-blown regional war, one that might even pull in the big global powers. The whole world was on edge. Oil prices jumped, gold prices shot up, investors braced for stocks to tank, the Standard & Poor's futures dipped. Headlines were filled with uncertainty and fear. But Bitcoin? Bitcoin barely flinched. Yeah, it did dip for a moment like you saw on the Heatmap, but that drop was shallow and almost automatic. It never even broke the key 100k level. It wasn't that end of an era like crash. That might sound like a small technical thing, but in market psychology, it's actually huge. It shows strength. It shows conviction. Bitcoin didn't just survive this chaos, it absorbed it. This kind of price action during a high-stakes geopolitical crisis tells us something important. People are starting to see Bitcoin differently now. It's not just a gamble anymore. It's turning into a strategic hedge. And this wasn't a one-off. It's a clear sign of how Bitcoin behaves in moments of global instability. Like a new kind of digital gold, but faster, leaner, and without borders. Let's break down what safe haven really means, because it's one of the most misunderstood ideas in investing. I want to make sure that you get that one right. A safe haven is where money runs when fear takes over the markets. It's not about chasing big returns, it's about protecting what you've got. For decades, gold, the US dollars, and treasury bonds have been the go-to safe havens. They're seen as risk-off plays, offering lower returns but way less volatility. But now, Bitcoin is stepping into that space. During the Israel-Iran conflict, gold did what it always does, it rallied. But Bitcoin, it didn't crash like a risky asset, it stayed steady. And while regular traders panicked, institutions and long-term holders quietly bought the dip. Why? Because they see what's coming next. If this conflict drags out, or if inflation makes a comeback, or if the US prints its way out of another crisis, holding cash isn't safe anymore. You need assets that actually preserve value, and Bitcoin is proving it can do just that. And this isn't just talk, the numbers back it up. Institutional money kept flowing steadily into spot Bitcoin ETFs during the conflicts. On-chain data showed no signs of panic. Big holders, were accumulating more Bitcoin. Plus, we saw a spike in stablecoins moving into exchanges, which often signals smart, strategic buys ahead. Now, think about gold's market cap, about 15 to 16 trillion USD. Bitcoin, just over 2 trillions. If Bitcoin even grabs a small slice of gold's safe haven roll, it could easily push past 250k. And here's the kicker. Unlike gold, Bitcoin isn't just scarce, it's programmable, transparent, and moves at the speed of the internet. It's not just another option, it's the upgrade. Let's pull back and look at the bigger picture. Over the past 5 or 6 years, Bitcoin has faced some of the wildest macroeconomic storms in modern history and come out on top. A global pandemic, a once-in-a-generation inflation spike, historic rise in interest rates, multiple US bank collapses, and now geopolitical escalation in the Middle East. Through it all, Bitcoin hasn't just survived, it's thrived. Look at the 5-year chart and the story is clear. Bitcoin has outperformed the S&P 500, gold, bonds, and most major tech stocks. It is the best performing asset class of the decade. Here is what's really interesting. Bitcoin is starting to act like an anchor, slowly but surely. It's becoming a benchmark, a baseline that investors use to measure other opportunities. Its growth, scarcity, and global liquidity are making traditional asset managers rethink where Bitcoin fits in a diversified portfolio. Just think about the market size. Global equities, more than 100 trillion USD. Bonds, 130 trillion USD. Gold, 15, 16 trillions. Global M2 money supply? Over 100 trillion. Bitcoin is just a 2 trillion slaver in this ocean. If it captures even 5% of that total capital pool, you're looking at a 10 trillion USD Bitcoin, roughly 500,000 per coin. And that's just with moderate adoption. The math doesn't lie. The shift is happening, quietly, relentlessly. This isn't just theory, it's happening right now. Bitcoin is already setting up a bullish pattern, and here's the thing. It's doing this before traditional markets even open. That's huge. It means Bitcoin is leading the charge, not following the crowd. We are also seeing altcoins like Solana and SUI turning green, which usually means confidence is coming back across the whole crypto space. And if you bought the dip over the weekend during the conflict, congrats, you're already seeing gains. But it's not just about price, it's about growing confidence too. Now, here is what most people miss. This whole conflict played out when US markets were closed. We haven't yet seen how Wall Street will react once Monday's trading starts. If stocks shake and Bitcoin stays strong, or even pushes higher, that's when institutions will really sit up and take notice. It's not just about ETF money coming in anymore, it's about a bigger story. Bitcoin moving from risky, fringe asset to the digital equivalent of a Swiss bank vault. And that's how a 160k Bitcoin cycle kicks off. That's how 250k becomes not just a dream, but a real possibility. And it doesn't start with a bang. It starts with steady strength, calm in the middle of chaos. It's time we change the way we talk about Bitcoin. Most people still see it as a bet, a trade, a quick swing, a get-rich scheme. But more and more, Bitcoin is acting like an anchor, as I said. Something solid you build around, not something you gamble on. Sure, the price will go up and down. We might even see corrections back to 98k, 95k, or lower if geopolitical tensions get worse. But here's the thing. That doesn't break the bigger picture, it actually proves it. Every time there is a correction that holds a higher low, every dip that institutions step in to buy, every big macro event Bitcoin survives, it all adds up. Bitcoin isn't just a digital coin anymore. It's becoming the foundation, the operating system of a new money era. An era where people won't say it's made of gold. No, they will say it's made of Bitcoin. And the ones who get that early, the ones stacking now while others hesitate, those are the people who will benefit most over the next decade. This is how generational wealth gets built, not by chasing quick pumps, but by understanding the big shifts. And make no mistake, we are right in the middle of one. So, what do we do with all of this? First, understand where we are. Bitcoin is proving its strength not in bull runs, but in moments of chaos. Second, zoom out. Whether it's 95k or 110k next week doesn't change the bigger picture. Bitcoin is becoming the base rate and the safe haven. And third, don't sleep on this moment. We may be witnessing the financial system pivot before our eyes. 250k Bitcoin isn't a fantasy anymore, it's a slow inevitability. If you're ready for that journey, hit that like button, subscribe and stay alert. Because in this market, it's not the loud moves that matter, it's the silent shifts. And right now, Bitcoin is shifting everything. That was Neil, stay sharp, stay informed, and I will see you in the next one. Bye bye.